right, I think we're ready to go ahead and get started. So, welcome everyone to our virtual Money 101 presentation. Thank you guys so much for joining me today. It's very exciting. So we actually have a month-long series of all of our financial seminars. So hopefully you guys register for all 4 of them. There are 4 this month. Hopefully I'll see you there at the other ones, but please join us. We have our Credit 101, a Budgeting 101, and an Auto Buying for Teens coming up as well. So be sure to register for those. So just a couple of quick things. We are going to have some knowledge check questions come through during the presentation. So if you have the ability to answer these questions, go ahead and put them in the chat box once those questions pop up. Or if you have any questions of your own throughout the presentation, feel free to put them in the chat box as they come to mind. We do have a representative monitoring the chat, and we're going to save all questions to the end just to make sure that we touch on all points. And then at the end, we'll go ahead and answer all of those for you guys, and hopefully you guys will gain some knowledge today. And then I think that's pretty much everything. I think we're ready to get started. So welcome. Let's go ahead and get started. So my name is Melissa, and I've been with Foothill for about 6 years, and I'm really excited to present to you guys today. I think you are at a perfect age to start learning about savings and the banking basics. A little bit about myself. I have been in banking for a little bit more than 6 years, probably a little bit over 10 years. I started as a teller at Wells Fargo, worked my way up the ladder, but then I came to the credit union world, and it's been really exciting. I also attended Cal State Fullerton. I have my bachelor's in business administration. And then fun fact about myself is I am a proud dog mom. So right there on the screen, that's my little baby Pepe. He's a Chihuahua. He's about 4 years old now. So he's a handful. So jumping right into it. So hopefully a lot of you are familiar with what credit unions are, but there are some people out there that aren't too familiar with them. So an easy way to put it, we are like a bank, just way better, I promise. Very similar. We have similar types of services. Savings, checkings, the basics, but there are some main differences, and I'm going to go over them with you guys today. So a huge difference between banks and credit unions. Credit unions are actually not-for-profit organizations versus banks, they're for-profit. Banks have paid shareholders. So that's usually why they have increased fees and higher rates for their loans. So it's because they need to make a profit to pay their shareholders versus credit unions. We're actually not for profit. Our shareholders are actually our members. So once you become a member of the credit union, you actually own a portion of it. You are one of our shareholders. We do make a profit here at the credit union. However, we usually have a goal that we try to reach, which is just to cover our expenses, paying our employees, paying for our buildings. And then once we meet that goal, the rest of our profit, actually, we put it back into our credit union. That's why we have less fees and we have better interest rates than the banks do, because we give back to our members. We also do a lot of community involvement as well. Another difference is our board of directors. So at banks, they have paid board of directors. So when they're making decisions, about the bank or, about their customers, they have their own interests at mind. Versus at credit unions, our board of directors are actually volunteers. So they're just doing this out of their own free time, out of their own kindness of their hearts. And they're regular people. They're members of the community. We have teachers that are on our board of directors. We have hospital employees. So they are just there donating their time to the credit union. Another one is open to the public. So it depends with credit unions on how you can join them. That's why a lot of people are hesitant for credit unions, because they don't know, if they're able to join, but it really just depends. And guaranteed, if you just do some research, you'll find a credit union right for you. So banks, they're open to the public. Anyone can walk in and open an account as long as you have your opening deposit and, your identification. But at credit unions, it it depends. So there's different types of credit unions. An example is employer-based. We also have community-based and faith-based. So with employer-based, it depends on where you work. So for Foothill, we're actually employer-based, so it depends on where you work. If you work for one of our partnered schools or hospitals, then you're able to join our credit union. If it's faith-based, it depends on where you worship. And community-based is typically where you live, is whether or not you're able to join that credit union. But for us, like I said, we're a schools and hospitals credit union, employer-based. So this is just showing a little bit of our community involvement. So like I said, we love to be involved with our school and hospital community because those are our employer groups that we service. So here's just some examples. So the first image you're going to see is us doing Read Across America. So we like to go out to the schools and participate with their events that they host. We'll go and read to students. Another event we like to host is our Bite of Reality simulation. This is really fun. We actually host this at multiple high schools. What this is it's a financial simulation that's supposed to teach you about budgeting. So the students will get an entirely new identity. They'll get an occupation, a spouse, a child, and they'll get a budget. And basically what you have to do is go through the simulation while staying in budget. And you're going to purchase everyday life items. So you'll purchase a car, a house, you're going to have to buy groceries. So it's a lot of fun and such a great learning experience. Next, we have our Classroom Improvement Grant. We do a lot of grants. We also do scholarships as well for students and for our members. So that's just another way where we like to give back to our community. So this is kind of just general what we're gonna go over, what we offer here at the credit union. So like I said, we are like a bank, just way better. So, you know, our banking basics, you have checkings, savings, credit cards, auto loans. And nowadays with technology, you know, online banking, you have everything on your phone available to you. So that's really convenient as well. So what I'm going to do is go into our savings accounts and why you use a savings account. You know, what is the best way to start saving? That's what I'm going to go into first. And then next, we're going to go into checking, which is probably going to be where the most exciting information is, because that's going to be the account where you're using the most and you're going to be doing most of your transactions on. So going into savings. So why have a savings account at an institution? Your money is in a safe place. So when you open an account here at Foothill, our minimum opening deposit is just $5. That's all you need in order to open an account here is $5, which is pretty competitive. I want to say at other institutions, it could be as high as $50 to open an account with them. But with Foothill, it's just $5. When you open an account at an institution, there are security precautions taken when you first open it. You do need to bring your opening deposit. You also need to bring a valid form of ID. So this could be a California driver's license, an ID, or a passport. You also have to provide your social security number. So I guarantee you guys, when you get older, that is something you're gonna memorize because you will have to deal with that a lot when you're adulting. And basically the reason why we get all this information is we need to verify you are who you say you are. Something else we do is we record your signature. So that way in the future, if we need to verify you, not only do we have these forms of ID, but we have your signature on file. So like I said, it's just added security precaution for you guys. Also, when you do open your very own account, it's important for you to know that that responsibility lies on you and you alone. Okay, you are in complete control of your account. It depends though. So for Foothill, if you are 18 and under, you do have to have a parent or guardian on the account with you or a joint on the account. But if you're over 18, then you are able to have your very own account. So like I said, you have control. So if you expect your mom or dad to come in and help you out, they wouldn't be able to do that without your permission. They need you there because as a credit union, we are not able to give out any personal information unless you are on the account and you're able to manage that account. like I said, that would be the case if you had a joint on the account with you. With joints, though, you want to remember that this person is going to have the exact same access as you. They're going to be able to maintenance the account, to withdraw, to deposit, to do everything. So you always want to be careful. Make sure you choose somebody that's trustworthy. So obviously your parent, they're a very trustworthy person, but as you get older, when you do decide to get a joint account with somebody, make sure that someone is trustworthy. I know a really common thing is to get one with your spouse. So you always want to make sure you have a conversation together of how you plan to manage that account. So you guys set your boundaries for that account because, like I said, both of your names are on that account. So you both have the responsibility for that joint account. Next, you won't lose money. So obviously having your funds at the credit union is safer. Like I said, only you will be able to come and withdraw those funds. We are insured by the NCUA, so that's awesome. So be rest assured that with the economy, your funds are insured here at the credit union. I like to show the example of, let's say you kept your money at home, right? You think it's safe, but there's a lot of things that could happen if you're just keeping your money at home. I don't know about you guys, but you might have a sneaky little sister that likes to dip their fingers in your piggy bank, or maybe you leave 20 bucks in your bedroom, it might disappear. But if you had your account here at the credit union, that wouldn't be the case. So like I said, you won't lose your money. It's going to be in a safe place. Next, I'm going to go into interest. So for savings accounts, hopefully all you guys know, you want the highest interest rate possible. The higher the interest rate on a savings account, the better. And why? Because interest is basically the amount that the institution or the credit union is paying you for keeping a balance in your savings account. So you're earning a little extra just by keeping your money in the savings account. And like I said, the higher the interest rate, the more return you're going to get back from that. So as you guys get older and much more mature with your savings account, that's something that you want to look into. Look at what interest rate you're getting. I did want to show you guys two examples of savings accounts to look into when you get a little bit more mature with your funds. So the first one is our money market savings account. This is a tiered savings account. So what that means is the higher your balance, the higher your interest rate that you're going to earn for this savings account. It is liquid. What that means when they say your money is liquid is you are able to withdraw from it. So if you have money set aside and you plan on not using it, but you still want access to it, a money market is a very good account for you guys to have. Just be sure to note that there are higher opening deposits for a money market. It could range anywhere from $1,000 to $2,000 depending on the institution. So usually it does take time for you to save up to open a money market. But like I said, if you want more bang for your buck, it's a good idea. Next is our certificate of deposit, or people like to call these CDs. It works a little bit different. The way that I like to explain it, that's really simple, is it's like a locked savings account. So you're not able to withdraw from it. It is not liquid. But with CDs, they do have a fixed rate. What that means is the interest rate will not change. It's going to stay the same for your entire term. And what I mean by term is for every CD, you do have to pick a term or how long you want this CD locked for. The terms can range anywhere from as low as 6 months to as high as 2 years. It really just depends, and you're able to choose that. But you have to make sure that you know exactly how long you won't need these funds, because whatever term that you choose, that's all that you can, you will not be able to withdraw at that time. Like with the money market, the CDs also have a minimum opening deposit. I believe for our CDs, they are $2,000. So once again, this is something you're going to want to look at when you're a little bit more mature with your savings. But if you know that, you have this money saved up and you are for sure not going to touch it for at least 6 months, 12 months, a CD might be a good option for you because it'll force you to keep it in there to save it and earn that higher interest rate and get a better return on it. So hopefully these are a little bit helpful for you guys once you get a little older. So then next I want to talk about automatic transfers. Automatic transfers were a huge help for me when I first started saving. I especially liked this when I started working. And basically, this is a free service that institutions offer. So there's no charge to have automatic transfers done on your account. It is important to note, though, that you do have to have a savings and a checking account in order to do an automatic transfer. Basically, what it is you scheduling a certain amount to transfer from one account to another. And I really liked this because this is just a guaranteed way that you're going to build your savings account. The way that I used to use it when I first started my savings journey was when I started working. I knew my paycheck was going to get deposited into my checking account every Friday. So since I knew this, I set up an automatic transfer for $25 to transfer from my checking account to my savings account every Friday, just to help build my savings account. And like I said, guys, this is guaranteed funds that are going to get put into your savings account. So if you're the type of person where you're forgetful, or maybe you won't be as responsible with keeping on track, you can have an automatic transfer set up. And like I said, it's a free service, and you can choose any type of frequency. You can do it once a month, you can do it weekly, you could even choose the date. I want it done every 15th, every 20th. It's really up to you, and you could always change it at any time. So highly recommend it. Also, it's important to note that just because you deposit into your savings account does not mean you can't withdraw the funds. It's your savings account. We know emergencies happen, things come up. So if you have to, you do have the ability to withdraw. However, I did want you guys to note that there is a federal regulation, it's called Reg D, that does limit the amount of electronic transfers that can come from a savings account. So by electronic transfer, that would mean transferring through your online banking, withdrawing at the ATM. There is a limit of 6 a month that you can do. If you go in person, that's fine. That doesn't count. You're able to do that. But just to show you guys how different credit unions and banks are. So with this limit, it's a federal regulation. All institutions have to follow it. With banks, if you do more than 6 withdrawals from the savings account, they will charge you a fee, an additional fee afterwards every time you withdraw. For credit unions, we do not charge a fee. All we do is tell you you can no longer do any electronic transfers. Because why are we going to fee you? We're going to communicate to you that you're not able to do it and then move on from there. Versus banks, they charge you a fee, they allow it to go through, so they get some profit from that. So like I said, just showing you how credit unions were really for the members. We just want to help you with your banking and make sure you guys are successful. So here is an example. So something that a lot of students will tell me is that they don't make enough to start savings, that they don't have a job or they only get an allowance. But I wanted to show you guys this example because a little can go a long way. This would be great if you're saving for the school year, right? Maybe you want some extra funds during the summer. So let's say that you save $10 a week, $10, that's it. That would equal to about $40 a month. And then after that, after 12 months, you would have about $480 after the that full year of saving. So like I said, that's great if you start at the beginning of the year. Maybe you want to save for graduation or prom or anything like that, or summer, just have fun. Having an extra $400 during summertime would be awesome. So like I said, guys, a little goes a long way. So just you are able to start saving even if you are at a young age. I highly recommend it. So another thing I wanted to go over was setting goals. This is very important. So once you guys start building your savings, it's really important for you guys to actually set goals for yourself. If you have a goal set, that just means you're going to be that much more responsible and work harder to achieve that goal. So we have short-term goal, which is 1 year or less. So just think in your heads, guys, right now, if you had to come up with ideas of what's a short-term goal, what's something that's achievable to save in 1 year or less. So here are some examples. So the newest iPhone. How much is the newest iPhone nowadays? I want to say 800 to $1,000 easy, right? So let's say you want to upgrade your iPhone next year. That would be a nice short-term goal to set for yourself. Maybe you're a gamer and you want to buy the newest console, the upgraded version. That's also a good short-term goal to set for yourself. And then lastly, like we talked about, prom. If you're a senior in high school, end of the year, you want a new dress, you want your makeup done, maybe you want a brand new tuxedo or suit. So 1 year or less, that's a short-term goal, guys. So definitely start setting those. Next, we have midterm goals. So this is something achievable in 1 to 5 years. So it takes a little bit more time. The best example is probably a car, right? A car, a lot comes with buying a car. It's not just your car payment. It's also gas. It's also insurance. And maybe you need to save up a down payment for your car. So a car definitely takes a couple of years to start saving for. Maybe vacation. Maybe you want to go out of the country. That includes airfare, excursions, and food, of course, when you're on vacation. So that could take a couple of years for you to save up for. And then lastly, moving out. Maybe if you're going to get your own apartment, maybe you're a senior this year and you're going to go away for college, and you're going to have your own place. There are additional costs for that, not just rent. You're going to need to furnish your apartment. You're going to need to buy your own groceries. You now are going to have bills, monthly bills. So that's definitely something that you want to save for. And even with apartments too, you usually have to put down a deposit, which can be pretty high. I want to say anywhere between $500 to $800 just a deposit for the apartment. So it just depends, but it's definitely going to take a couple of years for you to save up for that. And then lastly is long-term goals. So this is something that takes 5 or more years to save for. So the obvious one is going to be a house, right? That's probably the largest purchase anyone will ever do. A house, a mortgage nowadays is a 30-year commitment. So for 30 years, you're going to be paying off this house. So you definitely have to plan ahead. You also have to put a down payment. Usually people will put a down payment because it's helpful. So you're going to have to save up for that as well. College is another good one. I bet your parents, if they're there sitting with you, I bet you they started saving right when you were born, because they want you to go to college, and that can take a pretty long time to save up for. Like I said, they probably started saving when you were born. And then lastly is retirement. Usually when anybody starts working, you should automatically start looking into how to save for retirement. Find ways that it's going to benefit you. So that is also a long-term goal, so 5 or more years. So be sure, guys, when you do start your savings journey, set some goals for yourself. Keep it fun. We have our very first knowledge check question. So if you have the ability to put it in the chat box, let's see if anybody can come up with the correct answer. So the first knowledge check question, hopefully everybody's still awake right now. What is the minimum opening deposit at Foothill? So this is something that I mentioned at the very beginning of the presentation. So hopefully we've got some people that are in the chat box. I think we do. So I'm going to go ahead, drum roll please. So the answer is $5. So the minimum opening deposit at Foothill is just $5, guys. Super simple. Don't worry, we have more knowledge check questions coming up. All right, and to wrap up savings, these are just some savings tips for you guys that I think will be very helpful in your future. So the number one savings tip is pay yourself first. So what does that mean to you? No. It basically, I think a good way to explain it, it's pretty self-explanatory. You want to pay yourself first, put money in your pocket before anybody else's pocket. Because if you think about it, guys, if you try to push your savings like, oh, I got paid on Friday, I'll put money in my savings on Monday. What do you do all weekend? You go, you hang out with your friends. So you might not, chances are you're not going to have enough money to put in your savings. So if you do it right at the beginning, right when you get funds, that's just going to be more effective for you guys. And that's where automatic transfers really come in handy, you guys, to make sure that you are paying yourself first. So like I said, put money in your pocket before you put it in anybody else's. Know your expenses. So know exactly where all your money is going. Are you shopping a lot? Are you getting too much Starbucks? So if you know exactly where you're spending your money, then when the time comes where you feel like you need to save more, you can cut some of those expenses out. Nowadays, too, with technology, I know on our online banking, you can look at your online banking and it actually shows you a pie chart of exactly how you're spending your money. So it's such a great tool for you guys to use to track your expenses and your transactions. Because like I said, if you need to cut anything out, if you feel like you need to start saving more and you see that, 80% of your paycheck is going towards shopping, that's easy for you to cut out. Very simple. Next, be a smart shopper. So this one I know is not the most fun, but comes in handy when you get older. Look at the price of items, look for sales, look for coupons. When you move out on your own, you guys, you need to make sure you pay attention to exactly how much you're spending on items. I know that was a hard lesson for me to learn when I first moved out. But you're gonna look at your everyday life, what you can cut out. So let's say you're always shopping, you're always getting coffee, Starbucks coffee. If you want to be a smart shopper, maybe there's some alternatives, some cheaper alternatives. Make coffee at home, that's free. Or 7-Eleven, maybe go to 7-Eleven, get that dollar coffee instead. But yeah, it's just really important for you guys to start paying attention to how much items cost you. So being a smart shopper is definitely going to help you in life. And then lastly is needs versus wants. So your necessities versus your luxuries. Do you actually need that item or is it a want? I know I see this a lot with car shopping. When you buy your very first vehicle, this is something that people really need to look at. Do you need the most souped up car with all of the accessories and all the latest technology? Probably not. That's more of a want. You need to have something that you can afford that can get you from A to B successfully. So really look at your needs versus your wants when you guys are starting to save. Okay, so that was a savings. And now we're going to go into checking, which is a little bit more fun. This is where you guys are going to be doing majority of your transactions. So hopefully this will teach you guys how to manage it responsibly. I did want to go into check writing. So check writing is a little non-existent nowadays, but I think it's really important for you guys to at least know what to look for on a check. And a huge reason why is because there's a lot of fraudsters out there. And check fraud is a huge thing right now. So I want to make sure you guys are knowledgeable and aware of what's going on, especially too, because there are two age groups that are targeted when it comes to fraudsters. They target two age groups. I don't know if anybody knows those off the top of their head. One age group is senior citizens, the elderly. They target them because, they could be easy to confuse. So they're a good target for them. And then the next is you guys, the youth, because you are barely starting out. You might not be too knowledgeable. So once again, you guys will be easy to confuse or easy to trick. So I want to make sure that you guys know exactly what to look for when you do, or if you ever get a check. So basically what you're going to look at is the date. So with checks, you always want to make sure it has the accurate date and that it's legible. You can only have one date on there. Make sure it's the correct date, because if it's a future date, guess what? That means you cannot go deposit that check until that future date. So today is the 5th of April. So if this check said April 6th, do you think I could go in today to cash this check? No, you would not be able to. You'll have to wait until the date that's on there. Also, make sure that you guys are aware that checks can expire. So usually on the check, it'll say if it does have an expiration date, or how long it's valid for. But if not, then the rule of thumb is usually they're good for about 6 months. So you definitely want to make sure that you deposit it or cash it before then. But always make sure that it has the correct date. Next is pay to the order. So pay to the order, that is the person you are paying. So if I'm writing this check out, I'm writing it to Susie member. And it's important to note, guys, that when it comes to the name, you want to make sure that it is the correct spelling and the correct full legal name. If somebody has a nickname, you do not want to put their nickname because, hey, the teller doesn't know their nickname. So they're going to go by what's on their documents, which is what was on their ID. So always make sure that you have the correct name and it's the correct spelling. Next is the numeric amount. Basically, this is how much the check is for, but with the numbers. And it's really important to note when you guys are writing the numeric amount, make sure that you end it with the cents. You want to make sure that nobody can alter it, add any extra zeros or anything like that, because you never know if this is a person you're giving this check to and you don't know them. You really don't know if they're going to try and be sneaky and add some extra zeros. So always make sure to add the decimal with the cents. Some people draw a line, it really just depends, but be aware that people do try to alter them sometimes. Next is the written amount. So this is where you're going to write out the dollar amount. It's also known as the legal amount. And the reason why it's known as the legal amount is because let's say the written amount and the numeric amount were different. If somebody tried to be sneaky and alter it, legally, the teller has to go by what's written out on the check because you spelled it out. There is no way that that should be wrong. So it's the legal amount, also known as the written amount. Also, to make a note that you do want to end the written amount. You want to either spell out and no cents. Some people put the fraction, so they'll put 00 over 100, or some people just draw a line. This example is a good example of what not to do for the written amount. You want to make sure that you start writing out the amount all the way at the beginning of the line. As you can see in this example, there is room for someone to tamper with it. So they could probably add something in front of that 300 and no cents if they really wanted to be sneaky. So remember, always start it right at the line so that nobody can tamper with it. Next is the memo. So right here on this example, we have car payment. So it's most likely this check is for a car payment. For the memo line, that is completely optional for you. You don't have to write anything for in that section, but sometimes people like to do that just to remind themselves what the check is for. Or I know, my grandma used to write me checks and she'd put happy birthday right there. So it's really for your own use. I used to use it a lot when I would turn in my rent check. I would put my apartment number on there just as added security, just to make sure they knew who that check was coming from. But like I said, it's completely up to you. It's optional. You don't have to use it. And then next is the signature. So of course, no check is valid without a signature. It has to have a signature on it. It kind of seems like, well, duh, Melissa, of course they're going to sign the check, but I can't tell you how many times as a teller, someone would come in and the check would not be signed. And let's say you don't know that person and they're gone and left. It might be hard to get in contact with them again. And if they didn't sign it, that's kind of, it's your own fault and you won't be able to deposit it. So I can't stress this enough, guys. Always verify that there's a signature there. And like I mentioned at the beginning of the presentation, we do record your signature. So let's say if I wrote this check out to Susie member and it was for a large amount and the teller is like, that's a pretty large amount. They're probably going to verify my signature just to double check as extra security, especially if it's a check that's out of the ordinary. It's not a typical check that I write. And they're going to look at the signature on this check and then they're going to look at the signature on file and hopefully they match pretty similar to where they'll be okay with cashing the check. And then lastly is the MICR line. So those little numbers at the bottom, they actually mean something. So it's called the MICR line. And basically what it consists of is the routing number. This is basically the bank's ID number. It says what bank it's going to. or coming from, and then it has the account number. So what account is it coming from? And then it has the check number, because every check has its own number. They're usually in sequential order, so no check will have the same check number. So that's another good thing to look out for fraudsters. If the check numbers are different, most likely it's not a real check. So if this was me writing this check, it would have Foothills routing number, it would have my account number, and then the check number. So this is also a good way to find your account number. If you're ever looking for it, go ahead and look on your checks. It's right there. It's usually the second little box for the MICR line. Okay. Going into debit cards. So with your checking account, you will each get a debit card, and it is connected directly to your checking account. So anytime you do transactions, where you do purchases, it's going to pull from your checking account. So you always want to make sure to be aware of your balance, how much you have in the account. And nowadays, once again, with technology, you can easily track that through your online banking or even through your mobile app. So it's really convenient for you guys. You could even get alerts, if you want to be alerted anytime your balance is below $20, you can have that set up where you get a nice little alert, and then okay, stop spending, or that you need to make a deposit. With your debit card also, you do get a PIN. This is a personal identification number. It's usually 4 digits, and it's really important that you never share this information with anybody. This PIN is basically your password to your debit card. So you're going to use it when you're doing transactions, if you're withdrawing from an ATM, or sometimes you'll be using it to verify yourself. So make sure you never share it with anybody. If you do, you're putting yourself at risk, and you're taking on that responsibility. If that person, you think this person's trustworthy, you give them your PIN, turns out they're not, that would be your own fault. So you really want to be careful, guys. This is something you should not share. I know when I was younger, my mom, of course, shared her PIN with me, which I tell her nowadays that's something she should not have done. But just be careful. Also, when you are setting your PIN, you want to make sure that it's something that people can't easily guess. Because some people might put something that's easy to guess. I don't know if you guys can think of what 4-digit number that a lot of people like to use. Yes, their date of birth. So you definitely don't want to use your birthday. Also, you don't want to use your address. A good rule of thumb is do not make your PIN anything that you could find in your wallet. Let's say if you lose your wallet and a fraudster happens to find it, now they have your debit card, they could probably go through your stuff and guess it. Also, do not write your PIN on your debit card. I know I used to see that a lot, and hopefully people have learned, do not do that, because if you lose it, that person is able to take out money now. So just make it a number that you yourself will be able to guess, but you won't forget as well. If you do ever forget it, don't worry, you can change it, just in case. But like I said, the most important thing is you don't share this with anybody. Also, with your debit cards, there is added security for that. Like I mentioned, we're talking about if you ever lose your debit card or somebody steals your information. For the credit union, we do have security that's put on. So if we are monitoring your account and we see that there are some suspicious transactions coming through, we do have the ability to block your card. And this is just for your own protection, your own security, because now that we blocked your card, if anybody does have it, they're not able to use it. If your card does get blocked, we will typically order you a new card, and then you'll just have to go ahead and update all of your information for anything you added that debit card on. But like I said, it's really for your own protection. Something else that you can do that is not as permanent is freeze your card. So this is really convenient when maybe you lose your debit card, but you're not 100% sure that you lost it. Maybe it's at home. I'm right here at work right now, and I can't find my debit card, but I'm pretty sure it's at home. What I can do is I can go on my mobile app and freeze that card. So for the time being that it's frozen, no one can use it. Then what I could do, drive home, go look on my drawer, boom, I see my debit card. Cool, I know that I have it. I can go ahead and unfreeze it, and then I would be able to go to use it as regular. So once again, this is just a really good security precaution for you guys. Also important to know, your debit card can be declined. So you want to make sure that you have a balance in your checking account whenever you're using your debit card. If you do not have money in your checking account, you should not be spending. You should not be using your debit card. So please pay attention to how much your balance is in your checking, because like I said, it can be declined, and that could be pretty embarrassing. You know, if you're in the grocery line, there's a long line behind you, and you have to go and take everything back because your card got declined. So you don't want any of those embarrassing moments. Also, something I wanted to point out is overdrafting. So if you do not have enough funds in your account, there is a possibility that you could overdraft, meaning you will go in the negative for your account. If that happens, you know, that does not look like responsible history on your part. So you want to make sure that you are paying attention to your funds in your account. I'm going to go over some things that will help you with overdraft, you know, to help you avoid that. But you really just want to be responsible, because with overdraft, there can be fees associated with that, which I'll go into a little bit later. But like I said, guys, if you don't have the funds in your account, you should not be using your debit card or charging it or onto doing additional transactions. So just be really careful with overdrafting. We have another knowledge check question. Let's see if everybody was paying attention. What is another name for the legal amount on a check? So this one is a little bit harder. I mentioned it when we were talking about the check. Hopefully, see if anyone was paying attention and maybe knows this answer. Give it a little bit. So drum roll, what is another name for the legal amount on a check? It's the written amount. So if you guys remember, legally a teller has to go by what is written out on the check. So yes, written amount is the correct answer. Okay, so going back into overdrafting, something that you can set up is overdraft protection. Basically what this is when you link a savings account or a line of credit to basically pull funds from when you don't have enough in your checking account. And so this is a really good tool to use for emergencies. Like I said, you should still be keeping an eye on what your balance is. This isn't something that you should use on a regular basis. It should only be there for emergencies. So for overdraft protection, let's say you go ahead and set up your savings account as your overdraft protection. So if you have a transaction come through and you don't have enough in your checking, it will go ahead and just pull the dollar amount from the savings, helping you to avoid going negative. Another way to show how credit unions are so much better. So with overdraft protection, each institution is different. So you want to pay attention to that. With credit unions, if you have overdraft protection linked to like a savings account, we do not charge you a fee for transferring the funds. However, at other institutions, even if you have your savings account linked as your overdraft protection, they do charge you a fee for that. And the fees can get pretty high. I want to say at banks, the highest I've seen it is $35. So that can add up. You know, if you go negative $5, not only are you negative $5, now you have that $35 fee. So now you are negative $40. And a lot of people, this is how they get in trouble, is they build a hole. You know, they keep on charging because they're going to charge you a fee for every time that you're going that you're overdrafting. So just be really careful. Something else you can have set up is courtesy pay. So this is if you don't have overdraft set up. So let's say you don't have a savings, you know, you don't have enough in a savings account to cover, you know, for overdraft protection. You don't have a line of credit or anything set up. You can opt into courtesy pay. This is optional. Basically what this is this is the institution will allow the transaction to go through for a fee. So an example here, let's say if you only had $5 in your account and you totally forgot that, you know, a transaction was going to come through. It was the cup, you know, I don't know, maybe it could be your Netflix is only $5. So now you're going to go, you didn't have enough funds in your account. So now you're going to go negative $5. So now Courtesy Pay is going to kick in and it's going to charge you that $28 fee, but now you're going to be negative $33. So some people like this because let's say if it's a, electricity bill, a water bill, something that's important that you need to go through, and you want to risk it and you'll take that fee, you could have Courtesy Pay set up. Personally, I'm more in favor of overdraft protection if you're able to build your savings account to have as that emergency, but if not, there is Courtesy Pay is an option for you guys. But just be really careful because this is not something that you're supposed to count on. It's just supposed to be there for emergency. Next, going into our mobile app. So with our mobile app, there's, like I said, it's very convenient. There's a lot of access for you guys to send money electronically. Usually it's connected to your checking account. So like I said, always pay attention to your balance. Something that I did want to stress though, is just be very careful when you are using third-party vendors like Venmo or Zelle or Cash App. These vendors specifically state that you should only be sending money to people that you know, because if anything happens where it's a fraudulent charge or maybe if somebody tricks you into sending money, unfortunately us as a credit union, we can't really do anything because it's through the third party vendor. So you really want to be careful with who you're sending money to. With these vendors, if there's any issue that comes up or any dispute that you want to make, you will have to handle it directly with them, and they can be very, very hard to work with because they service a lot of people, so it just depends. So be really careful when you guys are using any apps and linking them to your checking account or your debit card, because if any, like I said, any fraudulent activity, it's the responsibility lies on the third party vendor. So I wanted to go into some of our card controls that we have. I talked about it a little at the beginning, but just to give you guys a visual, when you're blocking, we mentioned blocking or freezing your card, this is where you're going to go to do it. So as you can see on here, it's going to show you your debit card, the last four of your debit card. So you know exactly if you have multiple cards, you'll know which one that you are blocking or freezing. Also, you will have the ability to add a travel notice. So this comes in handy when you're traveling somewhere, because you can let the credit union know that you are traveling. So let's say I'm taking a trip to Mexico and my credit union all of a sudden sees a lot of transactions from Mexico. They're going to know, hey, Melissa lives in California. Why would this be happening? So they'll double check, they'll look to see if I have a travel notice and they'll see, oh, she planned a trip. It's not fraud. She's fine. So this is a really good thing to do before you guys are traveling, because I don't know if you've ever gone out and traveled and then your institution thinks it's fraud and then they block your card. That can be a hassle. You have to call and fix everything. So this is just a little extra precaution you can take just to make sure your trip is amazing. Also, we were talking about how your card can be declined. Also, your card does have limits for transactions, daily transactions. So you can actually increase those from your app. So let's say if you need to make a large purchase and the limit is $1,000, you could increase that limit on your mobile app to make sure that purchase goes through. But it would only be increased for that day. It will resort back to the original the following day. So this will come in handy for you guys, when you do, you want that easy access to managing your card, but you don't have to go into the institution or the credit union to do this. You can do all of it from your mobile app. So like I said, it's just added convenience for you guys. Next, I wanted to go over ATMs. These are automated teller machines. So with ATMs, this just makes it more convenient for you guys. If you're the type of person that doesn't like to go in person to the credit union, you could go ahead and use ATMs. You're able to do withdrawals, to do deposits as well. Each ATM is different, so it can depend on which one you're using. Also, ATMs do have limits. So there usually are daily limits to how much you can withdraw from the ATM. But like I said, you are able to increase those. So just remember that you can increase them through your app or even call our contact center. So then that way, if you do need to withdraw a little extra money, but this is a security precaution because if there weren't limits on how much you could withdraw at an ATM, let's say a fraudster finds your debit card, you don't want them to have unlimited access to your funds. So this is a security precaution also too, because ATMs can't hold unlimited amounts of money. They do have to make sure they have enough for each time when they service them. Also pay attention to fees with ATMs because it can depend on your institution. Let's say, for example, if you have a Wells Fargo debit card, you should only be using Wells Fargo ATMs. If you choose to use another bank's ATM, let's say you have Wells Fargo and you choose to use Chase, not only will Wells Fargo charge you a fee, but Chase will also charge you a fee for you're not banking with them, so they'll charge you a fee for using their ATM. So it just depends. Just really look out to those fees. There are even ATMs that will charge you a fee automatically. It usually does let you know at the beginning of your transaction, and if that's okay with you, that's fine. But if not, you want to make sure that you're accessing your institution's ATM. However, the good thing about credit unions is we actually share ATMs. So if you have a Foothill debit card, you can use any credit union ATM for free and any 7-Eleven ATM. So a lot more access to your funds, which makes it very convenient. So with ATMs, I also did want to caution you guys. You want to be really careful because this is also a way that scammers steal your information. So this is really common in ATMs and gas stations, and what they're called is skimming devices. So what these fraudsters do is they input this chip, and it looks exactly like the ATM. A lot of people don't notice it, and it basically reads your card information. Not only do they put that, but they also hide a camera to record your PIN, which is why a good rule of thumb is to always cover your PIN. Anytime you're inputting it at a store, at the gas station, anywhere, you always want to cover your PIN because if your PIN is covered, then that makes it harder for them to hack into your information. At institutions, we do try to have security at our ATMs. You know, we have cameras and we really try to stay up to date with cleaning them and making sure nobody is able to slip any skimming devices in there. But, you know, you just have to be really careful, especially if you're using an ATM that's in a like secluded area. Just once again, be careful and be on the lookout for that because they are pretty common at ATMs and at gas stations as well. I always like to say if you're at a gas station, if you can go inside and pay, you might want to do that because that's just a little safety precaution that you guys can take. So there are consequences for poor account management. So I talked about how you guys are in complete control of your account, and it's really important that you guys stay responsible, and this is why. So anytime that somebody goes to open an account at an institution, every institution pulls their name, or they process their name through ChexSystems. What ChexSystems is it's a reporting agency to assess the risk of opening an account for somebody. So for example, let's say if I have negative history at another institution, let's say if I had an account at Chase and I managed it poorly and got into a really big hole and was negative $200 and decided to leave and never go back, what Chase is going to do is, since my account, since I left it in a negative balance and with negative history, they're going to report that information to ChexSystems. So now when I go to another institution, let's say I go to Foothill and I say, hey, I want to open an account, they're going to run my name through ChexSystems, and it's going to pop up that I owe Chase $200. You know, do you think Foothill's going to want to open an account for me? Probably not. It really just depends. Every institution is different, but just know that they will record any negative closures to ChexSystems, and it stays on your record for 7 years. Okay. Also consequences, we talked about it a little throughout the presentation, but fees can really add up, you guys. So make sure that you're paying attention to them. Even if it's one fee, you want to make sure that you find out what that fee is for, so that way in the future you know what not to do, because they can add up and just make things worse for you. I always tell people, if you get charged a fee and you don't know what it's for, or it was an accident, something that happened and it's the very first time, I always recommend calling your institution, explaining the story, and see if maybe they'll reverse that fee. If it is a habit, most likely they will not do that. But if it's something that happened and you just started your banking journey, as with the credit unions, it's really good to reach out to them. Take it as a learning opportunity, but really pay attention to the fees that are associated with your account. And then lastly, it's important for you guys to know that credit unions, or not credit unions, but all institutions are able to close your account without your permission. So if you are abusing your account and they feel that you are no longer being responsible, they can close your account. So just make sure that you guys are aware of that as well. Oh, and then we have our last knowledge check question. Which employer groups do we service? So this is a harder one. So if anybody gets this one, then you are awesome, because this is typically the harder one that I see. Basically, I talked about this at the beginning of the presentation. There were 2 employer groups that we service. So let's see if, I don't know if anybody's in the chat and knows the answer, or if anybody said it out loud. But the 2 employer groups that we service are schools and hospitals. So if anybody got that, you are awesome. That's the harder one. So just wrapping everything up. So where do you start? So basically, in order to start your banking journey, you can start with a savings account, and then eventually upgrade to adding a checking account once you feel like you're a little bit more mature and you have a handle on things. Or you could open the savings and the checking account together at the same time. It's totally up to you. But that's just one step closer to your guys' financial independence. And don't forget, if you are not a member yet, if you don't have a savings account with us just yet, you are able to join. Like I said, in order to open a savings account, it's just $5 opening deposit. It does depend on your age of what type of savings account you go into. These are just 2 that I wanted to highlight, but we do have some for younger kids as well. And for those of you that are joining us, hopefully you guys know that it is National Credit Union Youth Month. So we are doing a really fun promotion for the month of April. If you're not a member yet, if you do open a membership in the month of April, you are entered to win into a raffle to win 4 Legoland tickets. So you have the whole month of April to go ahead and open your account. If you are already a member and you have an account with us, don't worry. You also can get your name entered into the contest by opening one of our youth certificates. So that's another option for you. So yes, if you guys, are in the market, please feel free, look into Foothill. Parents, if any of you guys are there, you also qualify for membership as well. So you could have your own account. But yeah, we're just here to help.